Investors and traders, welcome to the channel Market Chart Pattern. Today is 16th of July 2023, and I wish and hope everyone is having a great weekend. So in this video segment, we are going to take a look at the key US stock indices as we always do. And this video is for educational purposes only, and it is not a financial advice. So new subscribers to the channel, thank you for subscribing, and the returning subscribers, thank you for watching my content. So long-term subscribers of the channel will know that we have been bullish the stock market for quite a while, and we have had some patterns and the targets that we were watching for. Those targets have been met in some cases, in some indices. In fact, those have been exceeded. Now we still remain bullish the market. However, per our methodology, which is based on pattern recognition and Fibonacci retracements, expansions, and projections, we are also approaching certain key levels that we must be watching really carefully. Some of them could actually be resistance levels where the market can in fact pull back from, or find some resistance before moving higher. So what we are watching for is the S&P 500 index. Now this is the cash index. Normally for S&P 500 we like to take a look at the E-mini futures, which we will also do in a short while, but E-mini futures, the reason we like to take a look at is because of the shorter term movements. It's a better one in my opinion to follow for shorter term. However, this is what we are going to look at is a little bit longer term, and this is the cash index S&P 500. So here what we are looking at is at the daily chart, and in that the key level that we are watching is that this index is approaching its 78.6% Fibonacci retracement from the all-time highs reached, and the 20+% retracement it has had till 13th of October 2022 last year. Now the important thing is also to watch for this nice ABCD formation in which the market is approaching this resistance level. So we have a confluence of two things coming together. One is the pattern formation, the 1-to-1 projection, we like to label it as ABCD, and also the 78.6% Fibonacci retracement. So this level of around 45.50, we will just give it some round number 45.50. We need to watch it really carefully. If the market is able to close it at least two closing bases with good amount of points on the upside, then the chances are that this market is going to go and actually challenge those highs coming in from the January 2022. In fact, the precise date is 4th of January 2022. So this is what we are looking at. This is to make you guys aware that even on the cash index now on S&P 500, we are approaching the 78.6% Fibonacci retracement. We also have a bigger ABCD pattern, which has in fact actually completed, and the index is approaching a key resistance level that we must be watching. And if the price is because the momentum is strong, is able to close it out onto the upside, we usually like to watch for two consecutive daily closes, strong closes, then the chances are it's gonna go and tackle that high, all-time high that was reached back in January of 2022. Now let's actually move to the futures chart. So that's gonna be this is the daily chart of S&P 500 E-mini futures. So this is the one which we have been using on our as we have been tracking our technical analysis journey, where we have been calling in shorter term and also longer term moves. So here in fact our target was around here, 4,500 roughly speaking. That was met a while ago, and after that we have seen some retracement, and one of the things about the retracement was that it couldn't even fully retrace to this amount here, which is the amount the market had retraced in this ABCD rally higher, and the reason we were looking at this level of around 4500 was because we had a 78.6% Fibonacci retracement coming in, but we also had an ABCD pattern which has also been completed and price has been met. So we were looking for anything between this region of about 4480, which was going to be the 78.6% retracement, 4500 roughly speaking, because it is a level market could actually gravitate to, because 4500 even number, or at least in terms of zeros. And of course we had the ABCD higher. So all of those patterns seems to have been met. And shorter time, what we are also looking at is this ABCD kind of pattern formation on a smaller term basis, highlighted in the pink shaded area right at the 1.61 expansion of this swing right here. So this swing, which is in about, shown in the pink line. So what do we do with this? We need to be aware of these, and we need to be watching the price action really carefully, especially the early part of next week. So that is going to be the 17th of July, 18th of July, and of course the week after, I believe we have the FOMC, where the interest rate decision will be made. We have done a video about the US debt markets, where we looked at the 30-year long bond futures, the 10-year treasury notes futures, and also the 2-year constant maturity treasury note. So please do watch that video. Towards the end of the video, I will put a link to that. That is going to put a lot of things into perspective from an interest rate perspective, what the market is doing and what could be anticipated from a pattern recognition and just from the price action of these instruments alone. So here I am also going to move to the weekly chart, and here we go, this weekly chart. Here, what on the weekly basis, what we were looking for, it has been met. So we were looking for around 45.25 on the shorter time frame. We have also seen the 1.618 expansion. So there we go, two things coming together, 78.6% Fibonacci retracement, also the 1.618 expansion coming around right here around 45.20 level. So the market has actually met that. Now from a momentum perspective, the market is really strong. The price is above the 20 weekly moving average is in blue line, and that is above the 200 week moving average, which is the gray line. So however, because of the importance of the 78.6% Fibonacci retracement, and also some expansions coming together forming, and also the pattern formation that we have seen on the S&P 500 cash index, we need to pay close attention this coming week to the price action, that whether the market is actually going to find some good resistance, pull back, or whether it is so strong that it's gonna just keep on marching higher, which is also a possibility. Now let's take a look at the NQs. So the NQs have been the this has been the index which has been actually leading, and it was the one when in 2022 the market was pulling back because of the interest rates moving so much higher so much quickly. It was the one which was lagging. Now it has been leading, and this is the one which had actually reached a 78.6% Fibonacci retracement first, and ES had not, so meaning S&P 500 futures. That is why we were also thinking that maybe this market or this index has a little bit further to go, just from a momentum perspective as well. And although this key pattern was completed, we saw a few weeks, maybe a week or a few more days of pullback here, and then it kept on marching higher. So for now I'm just gonna, this pullback part, I'm going to remove it because I think we have seen that pullback, and now we have to keep on watching the price action, but the pattern formation around here was completed. So now let's take a look at it in a a longer perspective from a weekly chart. And what we are seeing is that, of course, this is the 78.6% Fibonacci retracement as we saw on the daily chart, but the market has clearly exceeded that, and then it went right into the 1.618 expansion, which is around 15,800 level, and here the weekly close has been positive. But the key thing is, again, the Nasdaq 100 was the first one to achieve the 78.6% retracement, and now the S&P 500 futures, and now also the cash is catching up. So now things are lining up. That's why we need to pay very close attention this week to the price action. And of course we're gonna have the week after, I believe we are going to have the FOMC meeting taking place, so we need to be vigilant to interest rate announcements as well, and how they might actually likely impact the indices. So this is what we are looking at in the Nasdaq. Our target has been met. Now we are watching for the price action. So in fact the target was met and then exceeded in the case of Nasdaq 100, and now we are watching for these further pattern formations, how the market is going to move from here, particularly because of the S&P 500 cash index pattern formation. Now let's quickly move to and also take a look at the Russell 2000. This is the small cap index, so where we have the smaller companies being listed in this index. Well, it's a fairly widely traded index as well from a day trading perspective. So the price has actually formed a nice ABCD back in the early 2023, so around February, and it just went down, and now it has also retraced 78.6% Fibonacci retracement. We began to get more bullish on it when it broke above this 1852 level, because that was the 38.2% Fibonacci retracement, and then it went back and traded back into this range right here, and now it has also formed this little pink shaded pattern ABCD, a bit extended ABCD right at the 1.272 expansion as well. So this is something we need to watch as well, and the good thing is that it respected this this trend line here, and if there's going to be a pullback, there's a chance maybe it just pulls back right into this range and maybe even touch this trend line, and then we'll have to wait and look at the price action if indeed there's going to be a pullback. So again, let's go back to our SPX here. This is the pattern that we are on the cash basis really watching very carefully, and again what it's going to mean is that as it approaches this 78.6% Fibonacci retracement, it doesn't mean that it's gonna pull back right from here, although it could happen. Momentum remains strong. It is something that we need to watch for, and then if there are strong closes above this level, that is going to be an indication that market is strong enough that it's going to go and perhaps tackle the all-time highs of 4,800 or thereabouts, and maybe even try to move a little bit higher. So this is something which we are watching, and I just wanted to make a video about it, and put these patterns into perspective and what to watch for next week price action in these stock indices. So thank you very much for watching the channel, and if you like how we analyze the markets using technical analysis, Fibonacci retracements, price projections, and expansions, and pattern recognition, please do subscribe to the channel. And if you found this video of educational value, then please do press that like button. That way it's an indication for me personally that people find my content of educational value, and it is a great encouragement for myself personally speaking to keep on making more and more videos for you guys for educational purposes, and keep on doing this job for you guys. Thank you very much for watching. Good luck and good trading.